Hey everyone, welcome to another great stream. I hope you're having a beautiful Wednesday and I hope your week is off to a great start. Today, we are talking about it's another topic that has to do with these greedy investors. And today we're talking about BTRs, or build to rent communities. And build to rent communities are increasing incredibly in popularity. And today we're going to talk about what BTR is, what build to rent communities are, how they might be good for the consumer, how they probably will be bad for the consumer, and why corporations are so excited to move to this model. So we've got a lot to cover today. We're going to dig in and get going. I've got a couple articles that we're going to go through today, and I also have a video that we're going to watch that talks a little bit about what BTRs are and kind of just goes through and explains a little bit. As always, if you're new to the stream, I love to know where you're watching from. So feel free to drop in the comments where you're watching from. Let me know what market you're in, whether that's somewhere in California, in the United States, or all over the world. I'd love to know where you're watching from. And also, if you're new to the stream and you like the content, please hit the like button. Also consider subscribing. It helps me out and it helps my channel out quite a bit. So let's get into it. So first and foremost, we're going to start with this article from realtor.com. And I'm going to make this a little bit bigger so you guys can see a little bit easier. We'll get rid of this stupid chat. There we go. Okay. In fact, we can make this maybe a little bit bigger. There we go. Now we can see. So again, build to rent. What is it and why it's growing in popularity? It's a little bit scary what's going on. And this isn't new as in like the last couple months or 6 months. It's been picking up over the last 2 years. And we're going to see kind of a little bit about what build to rent is, why it's picked up, and the effects that's going to have on consumers, both looking to rent and also looking to purchase. I want to preface this with the fact that, as you guys probably all know by my handle, I am a real estate agent. I'm a practicing real estate agent. I've been a real estate agent since 2017, and I've been in the real estate industry for over a decade. I know a lot of realtors will just tell you buy a house, buy now. It's always the best time to buy a house. I'm not here to tell you that. I don't look down upon renters. In fact, I help renters lease properties, get into rentals. And if renting is the right thing for you, then go for it, do it. If buying is the right thing for you, go for it, do it. So I am going to be a little bit critical of these build to rent communities, but I just want to make sure that everybody understands that I'm not being critical towards renters themselves. Obviously, renters need stable, affordable housing just like homeowners do. And renters have rights and they should be entitled to be able to have properties that suit their needs and fit their needs. So just wanted to kind of get that out of the way up front. So build to rent. What is it and why it's growing in popularity? Again, this is an article from realtor.com. This just came out fairly recently. It's just a little over a month old. Built to rent properties have become highly sought after real estate model for both investors and residents. These developments hold high potential for multifamily companies looking to meet the needs of shifting economic conditions and lifestyle preferences for U.S. residents. This article discusses build to rent, why so many are shifting toward this real estate model and its future, so you can decide whether it's an ideal investment opportunity. And right here, like this is kind of a little bit of foreshadowing. Like they're right off the bat, so you can decide whether it's an ideal investment opportunity. So it's already kind of geared towards, looking for that investor. Is this a good spot to put your money? Obviously, I know the pros and the cons to real estate investing. I've been around the real estate world for a while. I really don't like when real estate is looked at right off the get-go, right off the bat as a great, investment opportunity. Real estate is a great investment, but it's a great investment because it's your home and it's where you live and it keeps you safe and secure and it provides your family with safety and security. And it's a place where you can share meals together, share fun times together, and be with people you love. It is a good investment long-term, but this idea that, it's an investment first, I don't like when I see that, because homes shouldn't be thought of as an investment. Although they are an investment, they should be thought of as a little bit more than that. Build to rent. So what is build to rent? Build to rent, also known as BTR housing, or simply build to rent, operates similarly to apartment buildings under property management companies while offering a single family living experience. Unlike dispersed individual rentals, build to rent homes create communities with diverse housing types, including townhomes, cottages, and detached houses. So essentially what a build to rent community is think of it like an apartment complex. However, instead of a bunch of little apartments in a building or even condos or townhomes, they are single family homes. So the easiest way to kind of think about what build to rent is think about any of these new home building tracks. Think about any of these, new Lennar communities. I'm sorry, new Lennar communities or KB Homes communities, or, fill in the blank with whatever builder is prominent in your area. And you probably go to visit these homes, you visit the models, and they tell you, oh, this is how much they cost to buy, and you can upgrade it. Well, instead of going to buy in those communities, it's a very similar type of community. However, it's build to rent, hence the name build to rent. So they're not for sale. They're only for rent. And again, we're going to talk a little bit about what I think some of the pros and cons are about that. And they do fill a niche, which is good, but there's some downsides to that as well. I see there's a couple new people in the stream. As always, welcome in. Thanks for joining. Drop a comment. Let me know where you're watching. Consider liking the stream and consider subscribing. Let's continue. These homes take many characteristics of single-family rentals and enhance the experience by developing homes inside a professionally managed community. Some of these communities also feature leasing offices, pools, and fitness centers, which is becoming more and more common. Actually, we're seeing that these newer communities, these build to rent communities, people want amenities. And if they're going to pay a premium for a new build or a new lease or a new rental, they want to make it worth their while. So that is definitely something that, as a real estate professional, when I do have clients that are looking to rent or lease, I do mention that, hey, if you're going to pay a premium for rent, or if you're going to pay an HOA, or any of these add-on maintenance fees, what are you getting for it? Are you at least getting a pool, a spa, a gym, a common area, a clubhouse, something, anything? A lot of builders started to kind of move away from the amenities, because think about it. You put a pool in a community. Well, instead of putting a pool in, you could stack in 4 more units or 5 more units. So it's kind of a shame when builders opt to take that route, because amenities are just one thing that help make a community. These homes take many, we just read that. Build to rent communities also vary in terms of amenities. Residents typically prioritize privacy, outdoor space, and proximity to quality schools over standard features more often found in high density multifamily communities. And this was a huge thing, especially during the pandemic. And you'll see we have another article that we're gonna look at that has a lot of graphs. And we're gonna see that the build to rent idea really shot off like in 2021, 2022, right kind of after COVID, after the first kind of initial COVID wave, and then in the aftermath of COVID that was the next couple of years. A lot of people were giving up their apartment rentals because they were locked down. You were mandated, you had to stay inside, you couldn't go to any parks, you couldn't go to the beach, which that's a whole other topic. We don't need to talk about if that was correct or not, but people couldn't do stuff. And so they were really relegated to their own property. And if your own property was simply just an apartment or a condo or townhome with no outside space, especially apartments, that space got really old, really tiring, really boring, and really fatiguing really quickly. And if you had to share that space, even if it was with a loved one, a wife, a husband, your family, mother, father, anything, as much as we love those people, spending that much time in a small space with anybody can get a little bit trying. So a lot of people said, you know what, I want to move. I'm going to move out of my apartment, out of my condo or townhome. And I'm just going to, even if it's not purchasing, I'm going to go find a house to rent that just has a backyard. I can't tell you how many times I had people come to me and say, Joe, I just want to get out of my apartment and into a condo or a townhome or something, or a single family home, ideally, that has a backyard, a front yard, maybe even a pool. Because if we're going to be locked down, if we're going to be at home, we might as well have stuff to do, be able to go outside. Here are a few other features and characteristics of built-to-rent communities. Homes are designed with residents in mind, incorporating features that meet their needs. Professional property management companies typically manage these properties. Investors have a long-term ownership focus, aiming to generate revenue over time instead of immediately. Projects are often large-scale developments with multiple properties in a specific location. So these last 2 bullet points, again, kind of have that investor spin. Long-term ownership focus, generate revenue over time instead of immediately, and projects often large-scale developments with multiple properties in a specific location. So I kind of feel like that verbiage is speaking to the investors out there. Who is renting a build to rent? Many U.S. families consider homeownership a part of the American dream, but the price of real estate is unaffordable for many. I can't agree more with this statement. That is absolutely true. The American dream, the main tenet of the American dream has been homeownership. And that's one thing that really set America apart for a lot of people, especially in the formative years of America, in the late 1800s and into all the way through the mid 1900s. And even still today, people could come here with not much in their pocket, with not many possessions or belongings. I'm sure you've all heard the immigrant stories where you could come here, you could work really hard, you could make a living, you could earn income, and you could buy land, you could buy a home, and it was yours. Nobody could take it, nobody could mess with you. And that drew a lot of people from other parts all over the world to our great nation. A build to rent option, this is causing residents to turn to single family rentals or something similar like a build to rent option. So you can't afford to buy a home, so rent a home instead. Makes sense. A build to rent option can offer more privacy, flexibility, and better overall house feel than an apartment can't provide, which again is true. Apartments are great, but if you have a small family or you really need more privacy, that was one of the things when I got married to my wife and we were looking for our first place together. I said, I'm okay with an apartment, but I don't want one be in one of these mega apartment buildings. I don't want to hear other people. I don't want to smell other people. I don't want to, put up with a bunch of neighbors in close proximity. So obviously, a build to rent community that's made of single family homes can fulfill that type of request for some consumers and buyers. Well, in this case, renters. Why are investors and landlords interested in build to rent? So let's see what this article has to say. The build to rent sector has passed through its initial concept phase. That would have been in the 2020, 2021, 2022. It has experienced rapid growth over the years and now makes up a significant share of new construction. That's where one of the first problems is. As a result, investors are seeing the potential for high returns on their investments. Usually not a good thing for the little guy, the regular consumer. See below for other benefits that are catching investors' interest. So I want to kind of expand on this concept here. It has experienced rapid growth over the years and now makes up a significant share of new construction. And this is one of my gripes with the BTR model. Instead of builders building homes for people to purchase, they're building homes for people to rent. And the problem there is that unless you've been living under a rock for the last about 4.5 years, and really even longer if we go back, but we have a huge inventory crisis in the United States. That's what's leading to the affordability crisis. We have a lot of people. We have a lot of people that want to buy homes. We have a lot of people that need affordable housing. We have a lot of people that need affordable homes to purchase. And we are now shifting, when I say we, I mean investors and builders. They're shifting away from building affordable homes and they're shifting to building affordable homes to rent. Now, again, that still does solve part of the problem, but it doesn't solve the root of the problem. And the root of the problem is we need to have affordable homes for purchase. That means that builders probably need to build smaller homes, single family homes, detached homes, maybe on slightly smaller lots. Builders probably need to build 1,000 square foot homes, 1,200 square foot homes on 4,000 square foot lots or 5,000 square foot lots. And especially if they were single story, so that they could accommodate the aging population. Because remember, there are a ton of boomers. If you watched my live stream a couple months back about the silver tsunami and boomergeddon, we know that there's a lot of boomers out there that want to sell, they want to downsize, but they've got a 2.5 or 3% interest rate. They've got a home that's either paid off or almost paid off, and they don't want to trade that for a 7% rate for a home that's really, really expensive. And especially if it's a 2-story home. However, builders don't want to build that product because, and you'll hear this phrase a bunch and it really upsets me, it doesn't pencil out. And so for these builders, they think to yourself, well, why would I spend, and I'm going to make these numbers up. These numbers aren't rooted in truth. It's going to vary across the nation. But why would a builder spend $150,000 building a home that could sell for $200,000 when they could spend $180,000 and sell that home for $350,000. It's the profit margins. So why would they, concentrate on building small homes when they could build larger homes, or now in this case, build homes that they can rent? And the reason, and we'll get into this, why do builders want to build homes where people will rent them as opposed to purchase them? Well, if you buy a home if you build a home and you put it up for sale as a builder, and you've got, let's say, 40 homes in this brand new tract, and you put them up for sale and people buy them, that's great. You've made your money. You've made a nice little chunk and profit on to the next development. Well, when you sell that home, you're only selling it one time. You can only make money off of it one time. And yeah, the builder might make a little bit of reoccurring revenue if they also own the management company that's going to manage that community. So that's where the HOA fee comes in. But at the end of the day, they can only sell those homes one time. However, if they build 40 homes for rent, they're collecting revenue every single month. And on top of that, they still own the asset. When that asset appreciates, they can leverage that appreciation to purchase more assets, build more homes, build more rentals instead of homes for purchase. And then eventually, at some point down the line, they could sell off that entire community to start selling off individual homes after the appreciation has, shot up after 10 years. So yes, they make less money up front, but they have stable, predictable income. And who likes stable, predictable income? Shareholders, people that can count on their dividend returns. So not only do investors in the form of the property owner and builder like it, but the investors, the shareholders of the companies also like it because they have very predictable revenue. Not only that, they can raise rent every year and they can charge more and make more money. So that's some of maybe the pitfalls and downsides for the average consumer to these, build to rent communities. Again, if you have any comments, I'd love to know your opinion. What do you think about what I just said? Do you agree? Do you disagree? Do you think communities specifically built for rent are good for the consumer? Are they bad for the consumer? Let me know what you think. Stable and predictable income, which is what we kind of just talked about. Rental income can be far more stable and predictable than other investment options, such as stock trading. Regardless of market fluctuations, rentals typically generate income even during economic downturns. This is because many rentals, including single-family homes, provide residents with a house-like feel, making them want to stay longer, which makes sense. I mean, this goes for any product. When you make a product and it has more desirability by the end consumer, that product is going to be more coveted, and that end consumer is going to be willing to pay more for it. So kind of goes along with this. This makes build-to-rent properties appealing for investors since they can rely on steady cash flow, which as an investor, I got to say, it does make some sense. Long-term appreciation, again, what I was just talking about. Although the primary goal of build-to-rent properties is to generate rental income, there is also potential for long-term appreciation. This means investors can decide to sell in the future and make considerable profit. The potential for stable monthly income combined with long-term appreciation offers maximum financial security investors. So again, kind of the investor game. Oh, we have a comment here from John. Are there any examples of this or any proposed that are nearby Claremont? Are politicians for or against it? So thank you, John, for chiming in. I hope you're enjoying the stream. So for those of you watching that might not be familiar with my area, I'm in a city called Claremont, California, about 40 miles or so east of Los Angeles. John here is a local to the community, which hence his question. So in terms of what I'm aware of that's happening directly in Claremont, I'm not aware of any proposed build-to-rent communities. Typically, build-to-rent communities like to operate on a single-family home model. So they not typically are interested in townhomes or condos, although I'll be interested to see if that changes or evolves. So I'm not aware of any proposed right now. I would think that probably politicians probably are for it, because remember, politicians have a goal, and I don't know if this is going to apply to everywhere all over, the country, but here in California and in most states, there are numbers that states have to hit in terms of new housing units, and that's to alleviate this housing shortage. So in general, typically most politicians are in favor of really any type of housing, mostly if it can be classified as affordable. And you could classify these, there could be ways where you could say, hey, some of these are going to be affordable rentals and affordable leases. So I could see politicians, being in favor of these types of communities if they could use those to tick off a box. Another question here from Dominic. How do you think cities or municipalities can better incentivize builders to build those less profitable, smaller homes? This is a great question, and I have what I think is a wonderful answer. Now, this is an answer that I've seen floating around on a couple other real estate YouTube channels. I'm a huge fan of this. I'm obviously not a politician. I don't know how the inner workings of this would be. However, what I would suggest is we need to incentivize builders probably based on some type of tax credit or tax incentive. So if we went to builders and said, okay, builder, take this town, take anywhere USA, and we are the local government of anywhere USA, we're the local county, and you want to build some property. We understand that you want to develop, and that's fine. And it's going to be for sale. That's great. We need housing. Well, the average income of our community is $60,000. That's the average household income. So we are going to provide you with a tax credit for every home that you build that is going to be listed, MSRP, manufactured suggested retail price, is going to fall within a window that is that would make sense for that average income for that town. So this could vary, obviously, by town, by state, by city, by county, whatever. But I think that's one of the best ways to do it is, and towns need to take control. They can dictate what builders build. And there's a lot of builders out there, and building homes is a money-making venture. And if builder A doesn't want to subscribe to what you're telling them as a town, as a community, tell them to go pound sand and tell them to go find another builder that will do it. Because it is possible to make money on those smaller units. It's just not as much money as you could with a larger unit. So hopefully that answers your question. Oh, thank you. Yeah, maybe I would make a good mayor one day. Follow up here. I can only speak for here in Prescott, Arizona, for those watching, but it seems like our city is trying to maintain half-acre lots and not even allowing for smaller footprint lots. And this is a common tactic that sounds good on paper, that resonates very well with current residents that are there, because it usually means this is what they're used to. This is kind of the current status quo. Where this becomes a problem is when areas start to get more crowded. And in an area like Prescott, there's a lot of land, there's a lot of open space, there's a lot of room to build out. That can work for now. However, when that becomes a problem is areas in the more urban environments and suburban environments. So even out here, like in your suburbs of Los Angeles, that's one of the problems is these zoning restrictions. And because of zoning restrictions that don't allow for people to build higher density properties, townhomes, condos, so on and so forth, it means that you have less area to build, which means you have less housing units. And when a given area is completely built out, that's when we get rapid price appreciation and the affordability tanks. Now, obviously, in some areas, like your urban environments, New York, Seattle, Los Angeles, heck, even Austin, Texas, that's been a little bit of a problem. We have these very strict zoning standards where, there's a minimum lot size of 5,000 square feet, and you can't go below that, which means you can't build a smaller home. You can't subdivide. Of course, those things they're trying to change with some legislation. But that is one of the things that, having these huge lot sizes can work for some of the more rural areas or not quite as suburban or urban areas. But once all that land is built out, it can kind of come back to haunt that area because it gets very expensive very quickly. High demand for rental housing. Thanks for the questions and comments, by the way, guys. Appreciate that. High demand for rental housing. As mentioned, many U.S. residents prefer renting over buying. I don't know about that. I don't know if prefer is the operative word. I think maybe afford would be a better word. I don't know if people prefer to rent, but I could be wrong. Since build-to-rent properties are specifically designed to cater to the needs of American residents, they can benefit from sustained demand. This maximizes occupancy rates and significantly decreases vacancy periods, providing another layer of financial stability. So again, so far we've seen a bunch of, man, this is great from an investor aspect. Is it great from a consumer aspect? I've already kind of voiced, I don't think it's a great thing. But we're gonna get rid of Bart, the digital consultant. We don't need Bart right now. It certainly seems like it's great for investors, but is it good for the renter? Is it good for the consumer? I don't know. You got to be the judge of that. Professional marketing and management, scale and efficiency. So this is a big one for investors. Since build-to-rent developments are often large-scale projects, they provide streamlined processes and cost efficiency, leading to lower cost per unit. They also promote efficient allocation of resources and optimization of services, keeping residents satisfied, simultaneously enhancing property performance. This makes them extremely lucrative and sustainable. So again, another notch in the belt for the investor. So again, this kind of just talks about other things that build-to-rent and its pros and its cons. Some of these things, more space, that has to do with single family setup, maintenance-free living. That's going to be with any rental. Renters aren't usually typically required to maintain the property. The future of build-to-rent. Over 75,000 build-to-rent homes were built in 2023, an increase from 68,000 the previous year. And you're going to see on the next article, we're at 93,000 slated for this year. So definitely an increase. It's expected this number will continue to grow in the coming years. Of course it will, because if investors like it and they can make money, it'll continue. These communities offer many opportunities for property managers. In addition to making big yearly profits by renting these units, you can consider selling the community as an entity or converting it into individual for sale properties, which again is another thing that I was talking about. You get, these investors get this long-term appreciation, and then all of a sudden they can just sell them. And originally this house might have cost $200,000 to build. They wait 10 years. Now all of a sudden the house is worth $500,000 or $600,000. They've been collecting rent that entire time, and now they're going to sell it and free up some cash to buy another yacht or do whatever they're going to do. So again, a really interesting article. This one is kind of slanted towards why you should invest in them. Just sort of interesting. Oh, John with another comment. Just noticed that RC Homes on Town, just south off-ramp I-10 freeway, is being built as a build-to-rent community. Yeah, that makes sense. Interesting. But they're townhomes. Yes, Dominic, we checked out Prescott and we're impressed with the area overall. Prescott is a wonderful place. I'm a huge fan of Prescott. If I didn't live here, I would live there. But that's interesting that it's a BTR community with townhomes. And John, that kind of makes sense because in this more dense model that we currently live in the denser community that we live in, it's going to be difficult to do BTR single family communities. We might see that more in like areas of like Fontana, Eastvale, Norco, Corona. I could see that area starting to be, sort of inundated for BTR single family homes. But I won't be surprised when we see more of that, John, because I do think BTR communities are coming. And there's a notable builder in our area, Lewis Homes, who's been a builder for a really long time, built a bunch of homes in the late 60s, early 70s, and in the 80s. Very good quality homes. And they've almost gotten out of building homes for purchase, not quite all the way, but now they really focus on building communities, building homes for rent. So we're going to switch over to a different article. And this is the one where this is from Housing Wire. And this you can see, I'm gonna increase the size on this too, because y'all probably can't read that. There we go. So this is the one where kind of my thumbnail, my stream title come from. So build to rent construction gains momentum amid affordable housing shortage. A record 93,000 single family rental homes were finished in 2023, up 39% from the previous year. That is insane to me, up 39%. That's wild. Obviously, that just goes to show you that there's money to be had and the investors want it and they're going to get it. I think it's also, really important to note that this huge shift up 39%, that really just goes to show you that the powers that be would prefer people to rent. They would prefer the people don't own. There's kind of this tinfoil hat conspiracy saying, you will own nothing and you will be happy about it. I don't know if I quite identify with that sentiment, but it's, I can see why people identify and that resonates with them, because especially when you hear stats like this, where we're not building stuff for you to own, we're building stuff for you to rent from us, corporate greedy landlords. Housing affordability has plummeted at its lowest level since the 1980s, keeping many Americans in the rental market. As a result, some home builders have doubled down on the construction of build-to-rent homes. In 2023, a record 93,000 new single-family homes, so again, just single-family style homes, for rent were completed, up 39% from 2022, according to a report by the Wall Street Journal. The momentum is continuing as another 99,000 BTR homes are under construction in 2024. So another 99,000 are under construction right now. And we're not even halfway through. I mean, we're almost halfway through the year, but wow, that's crazy. The greedy investors, they're out there, they smell blood in the water with this. And this is going to be the thing. This is going to be the new thing. Are under construction 24, although that breakneck pace is expected to ease in 2025. That's interesting. I wonder why that is. I wonder if that just has to do with, possible projection of financial markets. Interesting. I kind of hope they expand on that a little bit. New rental homes are especially popular in the outer suburb of cities like Arizona, Texas, and Florida, as well as in other areas that are experiencing rapid population and job growth, the journal reported. And this makes sense. And you think to yourself, well, why are they especially popular in those areas? Suburbs of Arizona, Texas, and Florida, they got room. There's room out there. And that's where we're seeing a lot of these communities being built. And, investors are smart. Building small communities doesn't make as much money as building large communities. If you can purchase the land and have the money to pay for the land, you might as well buy as much land as you can, because building homes is not the expensive part. It's the land that's the expensive part. So why build 50 when you could build 150? So go to an area where the land is plentiful, bountiful, and more affordable. And that's why you're seeing stuff in Florida, Arizona, and Texas, areas in those states pop up with these types of communities. Rent growth for single-family homes, although slowing from pandemic-era double-digit peaks, continues to outpace apartment rents, according to John Burns Research and Consulting. Occupancy rates remain more resilient in single-family homes compared to apartment buildings, indicating sustained demand. We've talked about this. It's because single-family homes are a more desirable product as opposed to apartments or even condos or townhomes. So, of course, even though rents of other types of products might slow down, single-family homes, those rents will continue to increase, and people are going to, and they're going to be more resilient, because people, once they're in a single-family home, aren't going to want to leave. I mean, chances are you're in a single-family home because you have a family. So think about it. I mean, if you had 2 or 3 kids, you don't want to be uprooting them every 2 or 3 years because your lease is up and you're going to find a different apartment or a different condo or townhome. And what if that new property is not in their same school district? And then you're going to uproot them from their classes and schools and probably their friends. So if you have a family that is involved in a community with schools, of course you're going to want to stay there. It makes perfect sense. So I can completely understand why they're more resilient and the demand is there. It makes a lot of sense to me. In the city of Paso Robles, California, which is a city that's in central California, kind of just above Santa Barbara. In the city of Paso Robles, California, for instance, where the median home price hovers around $700,000, a real estate developer, STG Capital Partners, doesn't that just sound like a greedy real estate investor? STG Capital Partners, yikes. Is building 200 2- and 3-bedroom rental duplexes with monthly asking rents ranging from $3,000 to $3,700. So these aren't even I mean, a duplex is much more closer to a single family home than an apartment or a townhome, but still a duplex is not considered a single family home. It's kind of in that vein, but man, 3,000 to 3,700 to rent a duplex, one unit in a duplex. That's crazy. So these investors are going to make, over $7,000 a month on one unit, and they're going to build 200 of them. I mean, yikes. I mean, I can understand why SCG Capital Partners wants to build that type of model. I mean, that is very, very lucrative. And if they ever decide to pivot these rentals into for sale properties, I mean, duplexes always sell very, very well because of the potential rental income. These guys are going to make hand over fist money. Many builders feel bullish about places that are low on rental supply, but even places with substantial rental supply, developers have been able to keep BTR homes mostly full. They have also enticed new tenants with concessions such as a month free of rent when needed. And that's another thing. You can't do that. You can't do a month free mortgage when you are selling a home. The bank that's lending on the home is not going to like that. But when it's for rent, you can do all sorts of incentives and other promotional things because you're the owner. So if you want to offer, half off your month rent or 1 month rent free, or, no maintenance fees for a year, you can do so. Meanwhile, investors are flocking to the BTR sector. In another example cited by the Journal, Chicago-based asset manager Heatman launched a $235 million partnership with builder Crescent Communities to construct new rental homes across North Carolina, Texas, and Tennessee. Yow. So like I said, lots of money is flowing in, and it's probably going to be even more so in the future. So this next article is from a great website that I like to read. It's called Wolf Street, the stories behind business, finance, and money. The guy that runs this site can be a little crass, but I like him. He gets straight to the point. He's really straightforward. He's kind of against mega investors. I disagree with him on some things. I agree with him on some things, but that's how you know that you're, being exposed to new and good information. If you just agreed with everything you read, and lived in an echo chamber, it really wouldn't be much of a benefit to you or anyone else. So I'm going to share this tab with you guys, make it a little bit larger. So we're not going to cover this article in a super depth. He's very technical. His name is Wolf Richter. He's very, very technical. So there's a lot of stats and analysis in his articles. We're not going to go through this whole thing because we've kind of covered this, but we're going to get with some of it. So building professionally managed communities of single family houses for rent with their own leasing and maintenance office is the hottest trend in house construction. Build to rent has attracted home builders from the biggest on down, and it's attracted its biggest single family landlords that, instead of buying houses scattered all over the place to be rented out, are buying entire build to rent communities from home builders. And some also have their own build to rent construction programs where they buy the land and build these communities and lease them out. So he's kind of saying that he's seen that there are some firms that are approaching new home builder construction saying, hey, build your houses. Instead of selling them to individual people, sell the whole community to us, and then we're going to rent them out. So there's kind of two flavors, your chocolate and your vanilla. Your chocolate is hey, I am one of these investment corporation, Capital Partners, LLC, and we are going to raise funds. We're going to buy land, and we're going to build property, and then we're going to rent them out. That's your chocolate. Your vanilla is I am, Best Capital LLC, and I'm going to approach KB or RC or Lennar or whatever home builder, and we're going to approach them and say, hey, we know you're building a new community. We're going to buy this whole community from you, and then we're going to do what we want with it. Having entire communities of new build to rent houses with their own leasing and maintenance offices is more efficient for the landlord than older houses with more maintenance requirements scattered all over the place. Here's a really important piece here. And this is one sentence, but it's an interesting thought. And I think that this could be one of the few good things that might come from increased occurrences of these BTR communities. The biggest landlords have begun selling thousands of older houses scattered all over the place, given their high management costs and sky-high prices they bring in this overpriced market. So this is interesting to think about. So instead of these corporations buying, targeting a county and saying, we're going to buy a home on this street, 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 and a home on this street, you've got all these scattered individual properties. Well, that's a lot harder to service and maintain because they're all spread out. So the author here is kind of saying what he's noticed is that some of those corporate investors that bought up a bunch of individual older homes are going to sell those homes or have begun to sell those homes. And then they're going to purchase or reinvest in these BTR communities. Now, the reason I say this could be a little bit of silver lining is that could theoretically increase a little bit of supply for the end consumer. And it might make the idea of investors buying homes in regular communities, if it means that investors maybe think, hey, this isn't as good anymore. This is a better investment. That could mean that end consumers, your regular, first and second time home buyers, have a better chance and more of an opportunity to purchase those very homes. Of course, not after the fact that these investment firms probably bought these homes 2 and 3 and 4 years ago for, half as much as they're going to sell them to you for, but still, at least it could become available. There are the same landlords, American Homes for Rent and Invitation Homes, which American Homes for Rent and Invitation Homes, they're the biggest landlords in America. They were formed in 2012 at the end of the housing bust to buy these houses for cents on the dollar out of foreclosure. They know what they're doing. So that was kind of piggybacking off what I said. So these huge landlords, they might be selling them, but they're selling them for such a huge increase in what they bought them for because they purchased them after the 2008 recession and housing crash. So we're not going to kind of go through all this. What I want to kind of get to in this is this. So completed build to rent single family houses in developments with 50 or more build to rent houses. So you can see that this, there was an increase here in about 2015, 2016 of this model, only 4,000 developments in 2014, 2015. It actually ticked down from a little over 4,000 to a little under 4,000 from 2014 to 2015, shot up a little bit in 2016, and then was relatively stable. And then boom, COVID. And then it takes off like a rocket and it just goes up. And in 2019, they were operating at probably about 6,500 developments with 50 or more built to rent single family homes. And now we're all the way up to 28,000, over 10 times as many crazy. I'm sorry, not 10 times. That math is not correct, but a significant, huge increase that we're seeing in the BTR community. And it's pretty impressive. Before we go to the video, he just goes on talking. This is a really, really great article. I'll link these articles in the description below. I don't have them in there now, but I will link them below. So if you're watching on replay, they'll be there. If you're watching live with me right now, just check after the stream. You can come back. You can check out all these articles. If you have any specific questions, put them in the chat. You can always send me a DM. I'm happy to help. The last thing I want to show you before we get to just a short video clip is this. So this is Pacific West Companies, and this is a developer. I'm going to go to the about here. You should be able to see it now. So this is Pacific West Companies, a new generation approach shaped by decades of experience. Like, it just sounds like they're trying to pitch you and like raise capital. So this is an investor. It talks about investors aren't born. They don't take shortcuts. They don't take shortcuts. That's weird. Some of the real estate investors I know take huge shortcuts. They rely on hard-earned perspective that comes from years of experience. They discover what's truly new and what's been tried but failed. They break convention. It's the only way to transform the industry. It's the only way to become an active rather than a reactive. So all this stuff. So obviously these people, they're home builders. They're high-density home builders. They've been doing this for 30 years. The reason I'm showing this to you is because they have a blurb that's about build to rent on their website. Build to rent is one of the fastest growing segments in the housing market. Since the pandemic, build to rent has doubled its share of new home construction, which we just saw. is expected to double again by 2024. Build to rent goes by many names, including single family for rent, single family rental, and BTR communities. And for good reason. Built to rent features single family homes, detached homes built specifically to rent, not own. We've already discussed some of this. Built to rent homes enjoy the benefits of living in single family residences, benefits that don't come with traditional apartment living, such as backyards, more space. We've kind of talked about some of this. Here's where it gets interesting. So real estate investors are big on build to rent properties. They're not even hiding it. They're like, this is what we're doing. This is the game plan. We're going to build properties. We're not going to sell them to you. We're going to keep them and we're going to make you rent them from us. And they are like open and obvious about it. Build to rent homes are also growing in popularity among real estate investors. It's projected that investors will spend $40 billion, $40 billion with a B, on build to rent homes throughout the U.S. housing market over the next 18 months. $40 billion in 18 months. Imagine if we had $40 billion injected into 18 months to build small homes that people could buy. Imagine if that happened. Maybe we would see some alleviation in home affordability. Maybe we would see a little bit of improvement in these insane housing shortages and housing supply that we have. We won't know, unfortunately. Pacific West is ideally suited for developing build-to-rent properties with a background in building and developing both single-family and multifamily communities. We have experience and expertise to provide renters with the West's premier build-to-rent communities. We have real-world experience in building single-family and multifamily communities. Success of any residential construction project depends on dozens of factors. So you just go in and say like, oh, why we're so good and we're great and we're going to do these build-to-rent homes because we know that we're going to make so much money. It's crazy. They're already talking about, modular homes and how we can do modular manufacturing and construction and how it benefits build-to-rent homes. So now we're talking about an even more affordable product that they're going to build, again, not for purchase, but for rent. And again, in bold, we control the process. They want to control the process. They make no illusion about it. Oh, I'm showing you the wrong tab. I just realized this is the tab that I meant to show you guys, and where they're gloating and bragging about how they're so good and they're going to make so much money. Here's the stat: $40 billion on build-to-rent homes throughout the U.S. housing market over the next 18 months. Crazy, crazy. So before we end, I want to show you this tab here. I'm going to make this full screen so that we can see. Oh no, that was a pop-out player. There we go. This is what we want. I'm going to get rid of this banner here so you can see everything. So this is from the Today Show. Now this is about a year old. But it's kind of a nice video that talks about some of the BTR home trend.
The American dream isn't for sale, it's for rent in this community near Atlanta, Georgia. Welcome to Harmony Heights, 153 and 4-bedroom single-family homes, all brand new and part of the
Harmony Heights. I love that these investors and builders come up with in terms of names for the communities. It's crazy to me. It's crazy. And look at that. Harmony Heights, a Quinn residence, 153 and 4-bedroom single family homes. It's crazy. Yeah, Lee, you're right. Can't stop them. You're exactly right. And there's nothing that you and I are going to do, unfortunately. Maybe some legislation could be passed, but the very people creating the legislation are the very people that are investing in these types of things. America, right? Again, Harmony Heights is just it's a very cute name. It's very quaint. They got the logo with all the trees in the background, nice houses, 153 and 4-bedroom single family homes. I don't know exactly where this is and what the market is for this, but man, think about that. Think about if you had 150 rental properties. That's crazy. I mean, the amount of money to be made is unreal.
Family homes, all brand new and part of the build to rent trend. Renters enjoy modern appliances and luxury finishes, spacious closets, and smart home technology. An app allows them to request
I'll tell you right now that the whoever's reporting the story is taking some liberties, because what they showed you, these luxury finishes and luxury appliances and all these things. First off, it's got a smart doorbell. Okay, it's like $100. I don't know if that's high luxury. And I've been in enough new build homes. I can tell you this is all builder grade, This is nothing about this stuff that you're seeing is fancy. I can tell you right now that all of these finishes are going to be very, very basic. The floors are going to be, laminate flooring, which there's nothing wrong with this. There's nothing wrong with this stuff. And there's a place for them, and they're going to keep the cost down, and that's fine. But this idea that, oh, it's a real asset because you get this luxury lifestyle at this very affordable price, I think that's a little bit of a stretch. Yeah, Lee, you're not wrong. They'll fill up before they're built. You're right. The interest list will be gone. And I think it might have been this video or another article I read where they said, yeah, we're sold out before we're even done. It's absolutely true.
Spacious closets and smart home technology. An app allows them to request fixes. Their monthly rent and a small fee cover all maintenance.
Monthly rent and a small fee. A small fee, a $45 fee. That's interesting because usually your rent includes maintenance. So I'm surprised to see there's a $45 fee. Now, remember, if you're a corporate investor and you think to yourself, hey, we can extract another $45 from each of these 150 homes, times that. So 45 times 150 times 12 months. I mean, what are we looking at in extra revenue a year? It's not going to be this huge amount. But where that also is important is the fact that you think that $45 fee is going to be $45 forever. Ain't no way. That fee is going to continue to increase just like HOA fees do. And all of a sudden, before you know it, you're paying even more on top of your rent, which your rent really should include all of those things already.
And landscaping.
Think of an apartment complex, except you break it down into single family homes.
I love this guy. Look, the next shot on this guy. I'm surprised he doesn't have a pinky ring on. This guy is like the epitome of corporate investor. Watch this.
Richard.
Look at the shot. Look at this. In front of his new construction with his shades. He's got the jacket. You can definitely trust this dude, right? Like, oh man, I hate to judge a book by its cover, but yikes.
Ross is CEO of Quinn Residences.
Who is renting these homes?
A third of our residents are people who can't come up with a down payment. They can't afford 7.5% mortgage today. But 2/3 of our residents are residents by choice, meaning they elect to rent.
While the median sales price for existing.
And that's true. For some people, again, I started this stream by saying this is not a knock against renters. We need rentals. We absolutely do. And they deserve to have inventory and have affordable places to live. And I'm sure that there is a lot of people out there that find benefits in these types of communities. But to say that this is the solution to housing, I think that is a grave mistake. And sure, there are people, you said 1/3 of these people are people that can't afford the down payment. They can't afford a 7.5% interest rate. I get all of that, but I've got news. The people that elect to rent are going to, end up paying money every month. I don't know what amount because it varies across the nation and the world, really. But that's just more money that they're not able to save away for their down payment. So it's a little bit of a catch-22. I want to save for my down payment, but instead I'm going to pay rent every month that is going to cut into my ability to save for that down payment. Meanwhile, the cost of the home is only going to go up.
Homes has dropped nearly 2% from last year. A recent report shows renting as more cost-effective than home ownership in 95%.
Now, keep in mind, this is a year old. So a year ago, this applied. Today, not as much. The whole cost effectiveness when it comes to for rent or for sale is really on an individual basis. It really is. It depends what your long-term plan is, your short-term plan is. Why are you renting? Are you renting because you might need to change jobs in 2 or 3 years and relocate? Or are you renting because you just can't afford the down payment? So, this is a little bit outdated, and it's really, really personal to everybody's situation.
Of the U.S. right now.
Here in the United States, there are almost 1,000 of these build-to-rent communities with single-family detached homes. More than 500 are in the works. Each community has 50 or more homes, renting for an average of $2,000 a month.
So, just in those basic numbers, you don't even have to do any math. Just if you kind of just game it out in your head, like $2,000 a month times 1,000 communities, I'm sorry, 2,000 a month times however many homes in the communities times 1,000 communities times another 500 that are in construction. And again, this is as of a year ago. There's even more now. I mean, there's a reason that they're dumping money into this.
I never even heard of a community that was strictly a rental community. So I was pretty intrigued by it.
Luke and Rebecca Montgomery spent a year looking to buy a home, but struggled to find anything within their price range and big enough for their family. Then they found this neighborhood on Zillow.
This is not the time to buy or build. We would rather wait it out a little bit and see what happens. So,
okay, so that's an interesting thing that I want to bring up. So this young lady, she goes, now is not the time to buy or build. We're going to wait it out. This was a year ago. I'm going to bring up something really quick. And this is why potentially waiting can be bad. So I'm going to share this tab really quick. I'm going to make this bigger. So a year ago, Q2 2023, that's almost exactly where we're at now. 418,500 was the median. Now we're at 420. So it's gone up a little bit, not notably, but this is the problem with waiting. I mean, if you look at a graph, waiting almost never, this point is lower than this point. This point is lower than this point. This point is lower than this point. This is just the way that real estate trends. I mean, you can see we had a small, here's the 80s dip, which was very small. Then we had the kind of the 90s little dip here. This was 2008, which is the most substantial. But, if you plot a line here, it goes one way and it's up. So this lady's idea, oh, I lost my screen share. Let me do this really quick. There we go. So this woman's idea of, we're just going to wait and see what happens didn't really benefit her, unfortunately. Imagine the turnover in neighbors in a strictly rental community. That's another thing too, is like, how good of a sense of community can you have if, your neighbors are changing every year or 2 years? And if you live in a house, we all know that neighbors are really important to community and neighbors are really important. I mean, there's probably some of you out there that have had really bad neighbors. Bad neighbors freaking suck. They suck. I've had bad neighbors in an apartment setting. I've had great neighbors in an apartment setting too. Don't get me wrong. It's not just about that. But having a bad neighbor sucks. And imagine if you were just cycling through neighbors, God knows how often, like I said, once every 6 months, once every year. What if you're, like you said, don't get too chummy. What if you've got 2 or 3 kids and, they're best friends with the kids next door, and all of a sudden they up and move? Now, the same thing could happen, obviously if they own the home, but it's much less likely to happen. So that's a really great point. What is the sense of community like?
It out a little bit and see what happens. So this was just the right solution for us.
How nice is it to have the benefits of home ownership without the responsibility?
It's nice to be able to know that in the event something happens, it's not all going to fall on your shoulders. I can find myself very bored. I don't have to cut the grass.
Empty nester.
So I get that. That is nice. He's got a point there. Like getting this, this whole, like, I get to have a house, but I don't have to worry about all the maintenance and if something happens and all this stuff. Now, granted, these are all new homes that they're doing this in. New homes. I don't want to say they don't break, but it's just like a new car. The likelihood of a major system malfunction, you're not going to have to replace a furnace or an air handler or an AC compressor or the roof or replumb the house. You're not going to have to do that stuff in a new home. So that point is kind of negated because you could buy a new home if that was really your concern. But I get what he's saying. I get what he's saying there. But the one thing that they didn't mention is yeah, you don't have to pay for maintenance. So that doesn't fall on your shoulders, but rent increases will. Rent increases will fall on your shoulders, and rent increases are something that you're going to have to pay. And God knows how much that's going to be.
There's Marco and Myra Martinez says the low maintenance lifestyle gives them more time to enjoy the things they love.
I love to hear the birds singing and to see the trees behind my house. It's beautiful.
Newsflash, you don't have to be in a rental to hear birds singing or trees behind your house. You can do that. Like, I've got birds in my backyard. So I don't know why, but anyway, let's continue.
A career change prompting their move from Texas. The couple says instead of buying, they decided to rent so they could see if they liked the area first.
Now, this makes perfect sense. They're empty nesters. They moved for work. They moved for relocation. And instead of purchasing a property and just jumping in without knowing the community, the area, the neighborhood, whatever, they decided, hey, you know what? Let's rent. This makes perfect sense. That's perfect. That's a perfect plan. This is a great community for them. If it's just like, hey, we're going to rent. We need the flexibility. We might buy a home in a year. We might buy a home in 2 years. We're going to wait for the right home to come on the market. We're going to wait for the right home in the right community to come onto the market. No problem. I think that that is a brilliant idea and is a good way to use these types of communities.
This community offered us a great opportunity to rent a house where we feel safe. You don't have to own all the time. I mean, you can make the decision of renting and thinking about it. And sometimes that's better than just owning.
You can use an online calculator like one of these to see if it makes sense for you to rent or buy in a particular location.
People are taking a different path to home ownership.
David Howard, CEO of the National Rental Home Council, says Build to Rent provides an innovative way to introduce supply into the housing market, which is an estimated 6 million homes short.
What does it mean when it comes to affordability?
It is almost $1,000 less expensive on average to rent a single family home than to make a mortgage payment on a single family home.
Okay, so obviously I got a couple of gripes with this. So number one, you are increasing housing inventory, but it's for rent. And yes, it might be cheaper on a per month basis, but usually that changes after about the 4th or 5th year. And you can Google that. You can see for yourself. With the cost of increase in rent and the missed appreciation of your home, yes, renting is cheaper in the short term. But that shouldn't be a surprise. Home ownership has always been a long-term investment for most people. It's always been an investment where you buy the home and then 15 years later you sell it and you make money, or 12 years later you sell it and you make money, or 30 years later you sell it and you make money. So the idea that this is some like, oh, we've got the key to unlock the mystery. I think personally, it's a little bit ridiculous. In these standardized bulk manufactured homes, you'd be surprised how much goes wrong, especially in the beginning. They plow through these builds. That is absolutely truly, you make a really good point there. I go to a lot of new home builds. I tour new home builds. I've seen crooked baseboards, crooked fixtures, crooked lights. I mean, it's crazy. These are brand new. These are model homes. You're right. These homes are assembled on like an assembly line. How quick can we put them up? How quick can we get out? How quick can we sell them or get them rented? You make a great point with that comment.
When considering build to rent, experts say do your homework. Look for reputable developers. You can search those affiliated with the National Rental Home Council at buildforrenthomes.com. Also, think about location and if the community matches your family's lifestyle. Tips to help you lay the foundation for your version of the American dream.
Love that. And you might think build-to-rent homes lack a sense of community with tenants moving in and out, but Howard tells us residents on average tend to stay 2 to 4 years, so you do get a chance to know those neighbors.
Okay, so 2 to 4 years. That's not, I mean, that's good. That's not every month, but 2 to 4 years is not like establishing, like my neighbor on this side of me has been there for 30 some odd years. My neighbor on the other side of me has been there for, 15 or so years. That's how you really establish a community.
They also have build-to-rent townhouses and row homes in more urban areas. You'll find those single-family communities mostly across the South in the Smile states like Florida, Texas, and Arizona. And no, Craig, I did not make up that term.
Smile states. I like it, though.
Yeah.
So just kind of some interesting stuff. It's obviously this build-to-rent thing is very popular. And it's not going to go anywhere. And it's just another way to suppress the American home buyer, unfortunately. Does it fill a niche? Yes. And if some of these were popping up and they were available in some communities, that's fine. That's not a problem. But we need to be building homes for people to own so that everybody has a chance at the American dream, build generational wealth, and be able to have safety and security, in their life. So that's just my take on, the build to rent thing. I really hope you guys enjoyed this stream. Again, if you did enjoy the stream, please hit the like button, subscribe to the channel. I try to do these once a week, every Wednesday, usually around 6 or 6:30, depending on my schedule. If you guys have topics that you want me to cover, send me a DM, drop a comment. I'll read it on the replay. And I would love to cover a topic that you guys have. And until next time, thanks for joining the stream, and I'll see y'all really soon.